The views and opinions of this program are those of the hosts, guests, and callers. There is substantial risk of loss in trading futures and options, which you should carefully consider prior to trading.
Make sure to subscribe to the Market Talk YouTube channel. You can watch our latest interviews with top market analysts in the country, find bonus content, and much more. It's easy. Just go to youtube.com/@MarketTalkAg and hit the subscribe button. Or you can search for Market Talk Ag on YouTube.
And we continue our live coverage at the National Farm Machinery Show in Louisville, Kentucky, here today on Market Talk. Not a good day in the markets once again. We kind of continued the selling pressure in the grains and oil seeds on the session. We're going to talk about that. Ag Outlook Forum numbers came out from USDA as well early Thursday morning. No doubt had an influence on the trade. Let's bring in our market analyst today, our good friend Brian Doherty, Senior Market Advisor at Total Farm Marketing, joining us from his office in Wisconsin. Brian, always good to talk with you. Maybe not so good to talk about the grain markets here this week. It's been a tough one the last couple of days, but trying to make some sense of this and hoping maybe we can find some floors here soon, Brian. I don't know. It's just been a tough market across the grains all week, hasn't it?
Well, it has, and the big numbers that came out today. Of course, everybody's trying to think what the outlook says for yield and acreage. So that was just another thing that kind of made everything look heavy. And when I say heavy, you can talk about acreage and yield and this and that and the other thing, but exports. But when you put it all in the same vat, you get this thing at the bottom of that vat that comes out of the funnel at the bottom. That's the carryout number. So corn carryout, roughly 2.172 or in that ballpark. Currently, next year, USDA is expecting 2.532. So it's another increase. And unfortunately, the trend of price generally moves in the opposite direction of the trend in carryout, which has been growing. So this is a projection. It's not surveyed. It's not the actual yield, none of that stuff. So, but the 181 yield is probably what we should expect the USDA to plug into their models when they start talking about supply and demand. So that's one thing. Soybeans, I'm going to say more than heavy. Again, 435 million. Right now, over 300 million. So big increase year to year expected. Looking at 87.5 million acres, 52 bushels an acre. Those are some heavy numbers. Now, it was expected. One would hope that maybe the market might take this, news and have sold the rumor and bought the fact, but it didn't by the close. Things finished on a weak note. Sovecon raised expectations for the Russian wheat crop, and so wheat was the leader today, and then soybeans continue to sag, and we just don't see that export market very lively in soybeans the way we'd like it to see this time of year.
No, we do not. We do not. And Brian, I've kind of had this overall feeling in the trade that commodity deflation just continues to seem to be the overall trend with so many bearish things thrown at these grain markets. I mean, talk about that a little bit. Is that a view you would agree with, that we're just kind of in this commodity deflationary type of mindset right now?
Well, it is, and the question is, well, what causes that? And so there's different causes, and so your causes can be accumulated over time. So if we go back and look really almost 24 months ago, and you look at the causes behind the decline, it just boils down to the world reacted to high prices and produced more and used a little bit less. And then you throw in there other things along the way, a higher dollar value than where it was. At the Chinese economy, we keep talking about that. So the markets move on perception, and they move on momentum, and they move on attitude. And right now, the attitude has been pretty bearish in the grain market. The perception is the world of supply, and it's getting bigger, and the momentum has been down. So you're kind of swimming upstream against the trend. This is cyclical. That is, it's happened before. It's not like something new, but the depth of which the market seems to be heading down in front of the uncertainty of the growing seasons is a bit of surprise. It's almost like it's taking weather premium out of the market. And the funds or computer trades or whatever you want to call them that keep adding to their shorts, they're making money being short, so they sell more because they're making more money at it. And that's when you run into oversold markets, stochastics, a technical indicator, well deep into the oversold territory on corn, beans, and wheat. So, yet you got to have somebody step up and buy either their contracts they've sold or just start buying more aggressively. And the end user, lastly, the end user knows all of this, and they buy only as needed. So they're not aggressively buying. There's no pain in being an importer this year or a feed buyer like there was 18 months or 12 months ago.
Yeah. Well, I've thought about this too, to kind of go along with this. You know, a lot of times we hear the mantra, "You got to feed the bull," and in a bull market. At this point, do we have to feed the bear to try and get us out of these oversold grain markets? I mean, is that a way to look at this, Brian?
Well, the mantra is you need to feed the bull. The other side of that coin is you don't need anything for prices to drift or drop. You just they think you can do that on their own. Gravity pulls them down. You get down to a level here, and I've been kind of questioning, at what point does somebody short the market? And what's their goal? What's the downside? We're getting into such oversold territory. So the ship is certainly leaning to one side quite heavy. And when we've seen this historically, there have been some times where it snaps back pretty fast and hard, and then you can't own it fast enough. But we haven't seen that yet. Unfortunately, we talked, I think last week, I said the March corn had a swing and band objective. That is, you take a range of prices. If it tips over that range, you basically put a hinge on the bottom. That's your new downside. Well, I had pegged 419, 420 in March. Well, here we are. Now the question is, are we headed toward the round number? Are we going to $4?
Yeah. And I think that's something that I know in hearing from farmers and ranchers here at the Farm Machinery Show, I think that's some of the things they're concerned about is just where this bottom ends up hitting here. And really, Brian, I'm sure you're having a lot of these tough conversations. I think a lot of people who are having tough conversations right now, especially if they are undersold on their 23 crop, for instance, Brian.
There's no easy answers, and there hasn't been for some time. Now, you might look back with some hindsight and say, well, you could have done this or could have done that. My hindsight would actually go back to a year ago and say, well, it's the 23 expected price for crop. That's good value compared to history. The problem was it's good value compared to history, but compared to the 22 crop guys were selling out of their bin, it wasn't very good at all. So price is always relative to something. Value is another story. So the hindsight is, way back then, maybe could have done something more. That's all water under the bridge. There are no easy answers right now. There's a lot of contracts that people have rolled ahead on bases. The market knows that too. There's a lot of unpriced corn this year because farmers ended up being blessed with much better crops than perhaps they thought or were used to getting with challenging weather. The trade-off now is just that, boy, it's tough to know if you should pull the trigger or not. I would be inclined to say on February 15th, as we're getting this low in all three markets, keep in mind things can get lower, but if you do sell, know how to buy it back if you really want to be in the game. Talk to your advisor, talk to somebody that can help you do that.
I know we kind of touched on this last week, and give us something a little more rosy to talk about. Livestock, pretty decent day on Thursday, kind of came back across cattle and hogs, and especially in the case of the cattle market, Brian, I think we talked about this last week too, a little more optimism out there in terms of the way cattle have been acting and charts have been looking here as of late, isn't there?
There's a lot more optimism because the overall supply is tight. We saw prices march and continue to march into record high territory, then give that up, but they've come back a long way. Now, they're not anywhere quite to where they were. As an example, February live cattle today, 183.40 on the close, had peaked up at over 195. So we're not there, but the recent low was near 162. So we're a good 18, 19, maybe $20 off of that low. That is, from my perspective, very encouraging. It's supply based. We talked about at the top of the show, what happens when you have high prices, you kind of curb demand. And so I got to wonder, if beef beef might be its own enemy to the consumer right now, just because prices are challenging. They threw out some stats last week. I think we talked about 40% of the U.S. population, in theory, has less than $1,000 in their savings.
Yeah.
There's not a lot of disposable income for that crowd to go out and pay some of these higher end prices. So so it's going to have to happen through continued tight supply, and maybe we saw a lower jobs rate that helps. Maybe there's some economic indicators there.
Definitely. Well, Brian, we're about out of time here in this segment on the show. As always, we appreciate your insight. And again, I think it comes back to risk management. If folks want to reach out to you and get some advice and talk with an advisor such as yourself, I know they could do that very easily. How can they reach you there at Total Farm Marketing, Brian?
They can reach me through a phone call, 800-334-9779. And that would be easiest and best. But I know a lot of people like to, look at things in the evening. Just shoot me an email then. And it's Brian with a Y at totalfarmmarketing.com, or check out our website, totalfarmmarketing.com.
Brian, as always, it's good to talk with you. And, the way these markets have been going, we'll hope for maybe a little green on the screen on Friday's trade to end the week on a high note. What do you say? Can we wish for that? What do you think, Brian?
We can certainly wish for it. Turnaround Friday might be at hand. Want to remind the audience that Monday the markets are closed.
True.
So big 3-day weekend in front of the market.
Yeah, big 3-day weekend we'll have to take a look at. With that, Brian Doherty with Total Farm Marketing. Always good to chat with you, my friend. Thanks for joining us on Market Talk today from the Farm Machinery Show. We'll talk to you again next week.
Absolutely. My pleasure.